All right, welcome back. The crypto market is incredibly tense today, caught in a tug of war between two gigantic opposing forces. We are in a serious acceleration phase right now, and you've got to understand these dynamics to know what's coming next.
Okay, so let's just dive right into it. On the one hand, you have Bitcoin kind of treading water around $113,000. It's just stuck, waiting for a signal. But on the other hand, a brand new, groundbreaking product just opened the floodgates for a ton of institutional cash into a major altcoin. It's a completely different story over there.
So, to really get why Bitcoin is in this holding pattern, we have to look at the first titan in this fight, the U.S. Federal Reserve. Their big FOMC meeting started today, and believe me, the entire market is hanging on every single potential word. So why is everyone so on edge about this one meeting? Well, the market's entire future, at least for the short term, really hinges on the Fed's decision tomorrow, October 30th. They're talking interest rates, sure, but the real story is their massive liquidity program. This is probably the biggest macro event of the year for crypto, period. And the key to all this is a program called quantitative tightening, or QT for short. For months, the Fed has been using QT to basically vacuum money out of the financial system. And that action? It puts a ton of downward pressure on riskier assets like crypto, and it's a huge reason why Bitcoin has been hitting its head against that resistance level. Now, the big bet, the hope here is that the Fed won't just cut rates by 0.25%, that's 25 basis points in trader speak, but that they will also announce the end of QT. If they do that, it's like a declaration that the liquidity taps are being turned back on. That would be the strongest catalyst you could ask for to send assets like crypto flying. So it really just boils down to two scenarios. If the Fed is dovish, meaning they do things to help the economy, like ending QT, we could see a major price surge. But if they're hawkish and they decide to continue tightening that program, we could be in for a pretty significant correction. Okay, now let's switch gears and look at the other side of this tug-of-war. Because while the whole macro world is biting its nails over the Fed, there's a completely different crypto-native story playing out that could honestly change the entire game for altcoins. And this is the number you need to see. The brand new Solana ETF pulled in almost $70 million on its very first day of trading. A number like that isn't just a good start, it's a massive signal that institutional interest is shifting in a big way. And look, this is way more than just one good day of trading. This proves that Wall Street is getting hungry for new crypto products, and they're especially interested in assets that offer staking rewards. I mean, who doesn't love passive income? Plus, when you have giants like Western Union saying they're going to build on Solana's network, that's cementing its place in the future of real-world global payments. So here we are with these two powerful opposing forces, a nervous macro environment on one side and a super bullish crypto-specific catalyst on the other. So how can we tell who's winning? Well, there are a few key indicators everyone's got their eyes on right now. First up, the Fear and Greed Index. It's sitting at 51. I mean, that's perfectly neutral, right down the middle. This just perfectly captures the market's indecision and nervousness. If we get a dovish announcement from the Fed tomorrow, watch for this needle to just fly into the greed zone, which could signal a huge short-term move is about to happen. Next, we have to look at Bitcoin dominance. Just think of it like a pie chart showing where all the money in crypto is. And right now, Bitcoin's slice is a whopping 57.8%. That is a critical number to watch, and I'm going to tell you exactly why on the next slide. And here it is. This is the absolute key for anyone watching altcoins. If you see Bitcoin's price going up, but its dominance percentage is going down, that is the classic textbook signal that an altcoin season is kicking off. It means money is leaving Bitcoin and flowing into other projects at a much faster pace. So seeing that signal brewing, how do you actually play this? Well, with this much volatility on the horizon, the smart play is a disciplined one. That means seriously considering reducing your leverage before the announcement. It means setting clear stop losses to protect your downside. And it means focusing on the assets that have those strong stories and are attracting all that institutional cash we were just talking about. So the market is now set for its biggest move of the week, maybe even the quarter. What's the final takeaway from all this? It really all comes down to these two events. On one side, you've got this massive macro policy decision from the old guard of finance, and on the other, you've got pure crypto-native innovation and adoption from the new guard. It's a true clash of the titans. And that leaves us with a big, provocative question.
We've seen that this new wave of institutional money can create its own gravity, its own momentum. The question now is whether that force is finally powerful enough to defy the single most powerful central bank on the entire planet.